when you're talking about dividends, it's very interesting. I like to read a lot of things that Warren Buffett is doing. I figured he's made enough money in his life and he's smart enough in the financial sector that if he's doing something, it sounds like a good idea. And he's currently in the market right now buying high dividend stocks that are, I would say, conservative investments. He's buying some pharmaceuticals. He's buying some household brands. He's buying things that that you and I would buying them, of course, in the thousands of shares of stocks, not in the dozens of stocks. But he's doing it for a reason, because he sees the market changing and he's taking a defensive position. And what he's doing is makes so much sense. And I think if people would emulate somebody like a Warren Buffett, even if it's on a very small scale, they will understand the advantages of going into a defensive position right now. I think that no one has the answers right now of where the market's going to be winding up, but it does look like we're heading into a bear situation and not a bull market. It hasn't been a bear long enough to say it's a bear market, but it's scary to think that we are in the downside of that high trend that we went on for years at this point. And we have all the signals coming from the Fed about interest rates and other things that are going to affect the stock market. So, we have to see where it's going. We have the geopolitical situation out in the Ukraine, which is all affecting things that are happening every day. So there's a lot of things that are making people nervous, but you're not nervous if you have a plan, and that's the key.
Yeah. I'm always trying to push people to do something in the markets, whatever that might be, it is the definitive way to grow your wealth, no matter who you are. So I've been really trying to emphasize that, but it's difficult in a time when I know that it's not probably healthy to go in blazing. You need to take time and kind of look around, and you're thinking 5 years out. I'm always thinking 5 years out anyways, but now you really need to think 5 years out. And now I find that people really love, and I was a fault of this when I was in my early 20s. I loved making 20% on the stock market. I love making 50% in the stock market. I thought I was a genius, and I'm not interested in that anymore. My stocks make 3, 4 baggers, 5 baggers over years, and I'm much happier about that. So I've always looked more towards 5 years now, instead of, I used to look 1 year to 2 years, and I think people can just make more doing that. I think old me does better than new me.
Well, I think that's a smart way to look at it. And when you're on the younger side, you have the time horizon on your side, and so you should be looking at least minimally a 5-year chunk of time. I think that the other thing that you have to look at is, when you're looking at trying to make 20 or 40 or 50%, that's probably not very realistic in most cases, unless you just get really lucky with something. And most of us don't have that kind of luck. But I do think that if you're looking to try to outperform whatever the inflation rate is to grow your money and your wealth, that's a good way to go. Now, as high as inflation is right now, believe me, it can be higher. I've lived through it. There was a time when it was in the double digits and approaching 12 and 13% back in the 70s. And so, we sit around moping and groaning about 7 and 8% inflation, but it can get worse. So you have to look at, well, what can you do to at least offset the potential to lose some of your hard-earned wealth due to inflation? And if you're shooting to get those dividend stocks, that's going to help defray that in some way. And if you're into a stock that has a traditional track record of success, you're going to have a better performance. Even when in a down market, you're going to have better performance.
Yeah.
Those are the things that I look for. But definitely look for the 5-year horizon is a smart way to go. I think really young investors don't think that way, unfortunately.
Yeah. I'll say my brain is very tuned towards how interest rates and inflation and the economy work together. I'm really I get you pull this lever, this happens, and I think inflation I've realized is something that people are really just annoyed about. They don't understand why it happens. I think that people don't really understand why we can't have a deflationary currency, and they get annoyed that we can just print money. But the ramifications of doing that is perplexing to people, but it makes sense why we really need to keep printing money to keep inflation positive but not exorbitant. And then,
well, I may be a rebel on this thought. I'm going to give you my thoughts on the whole inflation cycle.
yeah,
Having worked in business, and I mean at the core of businesses from the beginning to the end, hiring and firing and manufacturing and all the other things in between. One of the things that businesses are always looking for is a way to offset the cost of running themselves. Retail businesses today, we know we have problems with labor shortages. We know we have supply shortages, and that's all has been incorporated in the excuse of why inflation is going up. It's costing them businesses more to buy things, so they have to pass that cost on somehow to you as a consumer, because we don't want to absorb that. We want to share that cost with you. But there's also the fact that whenever there's an opportunity for business to suddenly find a windfall, they will take that opportunity. So if something costs them a nickel more and they want to pass on that nickel to you as a consumer, what's stopping them from passing it on as 7 cents more to you?
Yeah.
Nothing, because you don't get to the dissecting of what the real costs of these things are. You don't know what a pound of hamburger costs to people who are processing the hamburger. They know, but you don't. So if they add a few pennies to it and it increases the cost of inflation, you're a victim. And that's what happens in inflationary cycles. And I'm not saying it's all about profiteering or businesses trying to get one over on the consumer, but it's partially that way in some areas. And that's a little scary because we have no control over that. Yeah. And then you also have to add on one other little factor, and that's the cost. Salaries are going up. People they want more money and they're getting more money. And again, what's the one thing that is controllable by a business? And that's what they pay people. So if they have to pay you more, they're going to charge me more to buy their product or service, whatever it may be. Yeah. And that's just a fact.
Yeah. What's interesting is I look at the flip side, and it's, by the way, the cycle's bad. There's nothing. I completely agree with that. What's interesting to give people perspective of why we can't go deflationary though, is you look at cryptocurrency, like a Bitcoin, for example. And one of Bitcoin's biggest problems is people don't want to spend it. And its value comes from transactions. People are doing more, there's more transactions every year with Bitcoin, don't get me wrong. But you also have a much, and I'm going to use technical terms now because I can't say anything else, but there's a lot less velocity with Bitcoin because of the deflationary aspect of it. So I get that. If you have people hoarding cash, that's a bigger problem than the other way around.
Right. So that's been happening now for a while, right? It's been happening that the volatility of the currency has been slow.
Crypto or the dollar?
Yeah, crypto.
Yeah, the volatility of crypto in the long span, the 11-year span. I used to be a hedge fund manager, as you know, on the cryptocurrencies. Its volatility decreases each cycle. So the first time it pumped, it went up like 20,000%. It was ridiculously high. It was that kind of growth. This last one, it grew, I think, only 4,000%, or maybe even like maybe I'm 10 off. It might have only been like 400%. It was each cycle is less volatile each time, because that 400% up also went down 400%. You know what I mean? So it was just this big up and down, and each of those big up and downs has been less each time. So I think that also has to do with the fact that there's a lot of it now. I can go way deep into crypto, just like you can go way deep into super savings. I'll just say that I think the deflation forces are starting to wean, and it'll always be deflationary, but its amount of deflationary is going down, which is interesting. It's a good way of start making people more interested in the velocity of Bitcoin and moving it as a transaction.
I'm nowhere near knowledgeable about it as you are, but when I watch the CNBC news and I see what's happening in some of these cryptocurrencies and how they fluctuate by thousands of dollars on a share price in a day,
Yeah.
I'm like amazed by it, because it's, first of all, it's very expensive, some of these shares and some of these big
Yeah.
Bitcoin, for example, and yet it can vary and it can ebb and flow by thousands of dollars in a matter of hours.
Yeah. So I'll just share something. So I bought all my Bitcoins when it was around 3,500, and I just kind of sit on them. I sell some to continue what I'm pursuing. But I say all that. I usually don't like talking about it, but I wanted to say that because the best thing to do when you buy crypto is to not pay any attention to it at all. I don't look at it. I don't
true of the
care about
entire
it.
stock market these days.
Yeah, I ignore crypto. I only look at it when people ask me about it, and I refuse. I have my numbers because of my crypto hedge fund experience. I know when I want to sell, I want to get out. It's around, and I tell everyone it's no secret. It's about 125K and 80K. I'm going to really start to start quietly offloading. But it's going to crash once it gets that high. I'm fairly confident about it because it's not like the stock market. I can't predict the stock market. It's truly, it's a bunch of people making decisions. It's a true market. Bitcoin is controlled by the way the mining algorithm works. There's an algorithm behind the scenes. So there's something else going on that I don't fully understand, but we saw unprecedented correlations when I did analysis that you would never see in the stock market. So there's more to it than just that. So I feel pretty confident, like 80K, I need to quietly start getting out.
Okay, well, I'm glad to see that you got in at a price that makes you a lot of money. It made you a lot of money because.
Yeah. And it's no coincidence. It was no coincidence. It was the bottom. It was very interesting. I had an analyst that was really good at technical analysis, and I had deep dive into the correlations of Bitcoin's fee and Bitcoin's transactions and how it correlates to the mining reward. And there was deep correlation. So we bought in at the literal bottom because we saw that this was actually a floor. It was a legitimate floor, and we had found every floor before that, and we hit it like clockwork. And this floor, we're looking, if it goes past this floor, it's going to, it just won't. Like it's not economically possible because of how the mining works. And so we bought in, and it was a very healthy investing. It took time though. No one really believed us. People thought it was going to keep on crashing, and we're like, this is it. We can't go any lower. Or Bitcoin ceases to exist, So we have to. It was interesting. It was an interesting time.